The average American has no idea of what's coming in the housing market. At least that's according to NerdWallet, who just released their 2023 home buying report. What they concluded from their research is that most Americans have, quote, unrealistic optimism when it comes to the housing market and buying a home in 2023. Now, I've already went through and read the entire NerdWallet report. That way I can break it down for you here to save you some time. But if you want to read the whole report for yourself, I will also link that for you down in the description. There are 4 key points that they highlighted in the report after surveying a couple thousand people. Number 1 is that most Americans need a reality check when it comes to the housing market. Number 2, they talked about the economic worries and the housing market worries and the potential housing crash worries that people have. Number 3, they talked about the lessons that people learned trying to buy a home in 2022 and why people failed at buying a home in 2022. And then they talked about 4th, which is the challenges that we're going to have in 2023. Let me start by talking about number 1, which is the reality check that most people need. According to NerdWallet, about 28 million Americans want to buy a home in 2023, but what they say is that if you're planning on buying a home, expect to spend more than what you think. This is where things start to get interesting, because in the more than 2,000 people that were surveyed, what they said is that the average price that they expect to pay will be $269,000 for the home. Now, if you compare these numbers, the prices that people expect to pay for a home to reality, you'll start to see where the problem is. This is data from the Federal Reserve Bank, which shows the median home prices across the United States. And what you'll see is that the last time that we saw median home prices in America under $300,000 was around 2015. Now, if we fast forward to today, it looks like median home prices are just higher than $467,000. So people are wanting to and are expecting to spend this on home prices in 2023, but home prices are actually closer to this right now. This brings me to the second thing that NerdWallet talked about, was people's outlooks on the housing market because of the economy. Now, of course, we've been keeping you up to date on all of this and the economy on Market Briefs, which is my free financial newsletter. If you haven't joined Market Briefs yet, it's an easy way for you to stay up to date on what's happening on things like the housing market, the stock market, crypto, the global economy, and our own economy. You can read it in less than 5 minutes every morning, and it's completely free. So if you haven't joined my newsletter, Market Briefs, yet, I'll put the link to how you can join Market Briefs for free down in the description below. This is where things start to become even more interesting, and what you'll see is that each level and each step will build on top of the previous step. But they asked, what are your thoughts on the housing market and a potential housing market crash? And what they saw was that out of the people that were surveyed, 61% of people said that mortgage rates are, quote, unprecedented. Essentially, we have the majority of America saying that mortgage rates are too high. Why are they too high? Because it's too expensive to get a mortgage. So mortgage rates are going to fall just because they're too high. Let me start by talking about this, and then I'm going to talk about this. Home prices have begun to fall in some pockets around the country, especially the tech-heavy areas where we saw the biggest bubble and the biggest boom during the pandemic. Like San Diego has seen their median home prices fall from about $850,000 in the early part of 2022 to $765,000 towards the end of 2022. Meaning that their median home prices have fallen by around $100,000 in just 1 year. Now, home prices and home price movement is very localized. It's going to change neighborhood to neighborhood, but the biggest factor that influences which direction home prices will go is mortgage rates. According to the study, most Americans think that mortgage rates are going to fall in 2023 because mortgage rates are just too high at where they are right now, and they're at these unprecedented levels that we've never seen before. So the average person says that mortgage rates are going to fall because mortgage rates are unprecedented right now. We've never seen mortgage rates this high before, and we have mortgage rates at right around 6% for a 30-year fixed rate mortgage. Now, if we look at the average 30-year fixed rate mortgage over the last 30 years, what you'll see is that the average mortgage rate was actually 7.75%. Our mortgage rates today are high, especially when you compare mortgage rates over the last decade since the 2008 crash to where we are today. Based off of those levels, our mortgage rates are high. But if you look at the average mortgage rate over the last number of decades, we're still lower than the average. And if you look at the high when it comes to mortgage rates, well, we're way off of those highs. So yes, mortgage rates are high, but it's not the highest we've ever been. Now, I'm not going to do a full deep dive of what impacts mortgage rates in this video because I've already done that on my channel, but there's 2 factors that you need to know which influence mortgage rates. Number 1 is the Federal Reserve Bank, and number 2 is inflation. When the Federal Reserve Bank raises interest rates like we've been seeing them happen, that puts more upward pressure on mortgage rates. And when we see high inflation, that also puts upward pressure on mortgage rates. So if we continue to see the Federal Reserve Bank raise interest rates, and if we continue to see high inflation, that's going to put more upward pressure on mortgage rates. The third thing that this report talked about is why people fell short in 2022. Because we had a lot of people that wanted to buy a home in 2022 and take advantage of the low mortgage rates before home prices really boomed, but then we saw a lot of people fall short. In this economic cycle, the Federal Reserve Bank started raising interest rates in the beginning part of 2022, and by the end of 2022, the Federal Reserve Bank had raised interest rates 7 times. That pushed mortgage rates from under 3% in the beginning part of 2022 to around 7% towards the end of 2022. That meant if you needed to borrow $300,000 to buy this home and you could borrow this $300,000 at 3%, your mortgage would cost you just under $1,300 a month. But at 7%, that meant that the same mortgage would be costing you right around $2,000 a month. We're talking about almost a 50% difference in price just because of what your mortgage rate is. Not to mention that if you bought a home in the beginning part of 2022, you probably paid even less than what you would have had to pay at the higher mortgage rates at the end of 2022, because across the country we saw home prices rise by an average of 7% in 2022. That meant that if you were looking to buy a home towards the second half of 2022, not only were home prices higher, but also mortgage rates were significantly higher. Now, before I talk about the obstacles that might be coming in 2023, one lesson that I kind of want to highlight that was part 2022, part 2023, has to do with pulling equity out of your home, because what people saw is that if you bought a home before 2022 or even 2022, you might have seen the value of your home rise, which made a lot of people feel wealthier. But the only way you can actually realize this wealth is if you either A, sell your home, but now you have to actually sell your home, or B, you do a cash out refinance. And many people, while they might think that a housing crash is coming, there's also been a boom in mortgage refinances recently in 2023, because in the beginning part of 2023, we saw mortgage rates fall a little bit, not anywhere near to where they were a year ago, but a little bit lower off of their peak of around 7%, which caused a major mortgage refinance boom, which meant that people still wanted to pull out all the extra cash that they had in their homes. That way then they could have this cash in their pocket. This increases the amount of debt out there. This increases the payments that people have to pay, because now your interest rates are probably higher, especially if you got a mortgage for 2, 3, 4, 5%, which means now you're paying more money. And then if you're not using this cash to buy a productive asset, meaning if you're not using this cash to buy a rental property or to invest this money into a business or something like that, that means you're buying liabilities with this. Now you're using your money on this invisible equity that could be going down to buy something that's going to cost you more money. So that's a lesson that we'll probably hear more about in the coming 12 to 24 months. But this brings me now to number 4, which is what are going to be the major obstacles in 2023. And NerdWallet made a chart highlighting these. So let's look at that. They asked want-to-be home buyers, which of the following are preventing you from pursuing home ownership at this time? And the biggest factors were, I don't have enough money saved for a down payment. I'm not making enough money. My credit score is not good enough. The current economy is not good enough to buy a home. There's not enough available homes within my budget. Mortgage rates are too high. All the way down the list, that's when mortgage rates become an issue. And then you have the lack of available homes, and on and on and on. So according to this data, when you ask people why can't you buy a home, the reasons why are not because home prices are too high. It's not because mortgage rates are too high. The number one reasons why are because people don't have enough money for the down payment, or people don't have enough money to afford the homes that they're looking at right now. Now this is where I want to give you a little bit of a caution and get you to understand that if you want to actually buy a home, the biggest thing for you is to make sure not that you're timing the market, but rather that you can buy a home that you can comfortably afford. That means you can afford the down payment, and that means you can afford the monthly payment. If you can afford these two things comfortably, you don't have to worry about where the housing market's going or if we're going to have a housing market crash, because for you, you just have to make the monthly payments. And if you have enough income coming in to comfortably make the monthly payments, where you still have enough money to continue investing, then you can go out and buy a home. And even if home prices crash, no big deal. You can continue making the monthly payments. But the key here is you have to make sure you can comfortably afford the monthly payments, because many times we are sold on this idea that the home that you live in is the biggest and best investment that you'll ever make. So people go and buy too big, they stretch themselves too thin, and now you sacrifice real investments, investing your money into rental properties, investing your money into the stock market at the expense of having this money pit of a home that you live in that you hope that you'll be able to sell for a profit at some point in the future. Don't make that mistake. Buy a home that you want to live in, that you can afford, meaning you can afford the down payment and the monthly payment. If you can do that, then what happens in the housing market is completely irrelevant to what's happening to you, because you can comfortably afford your home, and even if home prices crash, oh well, you can afford the monthly payments. That is the key if you really want to be financially free and buy a home that's not going to cause a lot of financial stress on your life. Now, of course, if you buy a home, you don't want to see the value of it go down, but this is where just understanding that the number one goal, if you're going to buy a home, is to make sure that you can afford, keyword afford, the monthly payment and the down payment. Well, there's a lot of different ways you can invest in yourself. Before me building these businesses, I was investing into myself, into my own education. And it took a long time for me to really understand the different ways to build a business. I started a lot of different companies. I've been an entrepreneur for over a decade now. Some of my companies did really well, some of them didn't do well. And so you got to figure out